At Alpha Morgan Capital, we know that wealth creation is not just for you alone, but for the next generation as well.
That's my boy!
Congratulations, dear!
We at Alpha Morgan understand that every effort you make daily is a journey to create sustainable wealth. That's why Alpha Morgan stays committed to helping you sustain generational growth in wealth so you can focus on other things. Alpha Morgan, funds management, investment banking, financial advisory. Alpha Morgan, your investment banking institution. Go to www.alphamorgan.com. Call 081 51 71 7171. Alpha Morgan, growing your wealth.
Okay, so good morning, ladies and gentlemen. I hope I'm audible and the slides are visible. This morning, this is the end of the quarter, Q1 2023. And the theme of this discussion today is investor concerns and strategies for maximizing yield in volatile markets. So, again, this audience are sophisticated investors, Nigerian investors for that matter, in global and domestic markets. We invest in fixed income securities, money market funds, alternative asset classes, precious metals, real estate, and so on and so forth. Alpha Morgan is one of the fastest growing asset and wealth managers in Africa. I've advised clients and I've been extremely prudent in their advice. Their shareholders' funds are over 750 million assets under management are in excess of, in fact, I think approaching 20 billion. So we know the area of specialization. They are rated, and Financial Times call them one of the fastest growing companies in Africa. Having said that, because nominated as the most innovative investment bank by Business Day, and they have all the laurels. There's no point about laboring the issue. Now, today we're going to talk about 5 things in all: investor concern and the global spillover effect. Right? So we're going to be talking about most are disabled participant sharing. Can you enable us, please? What's concern on global spillover effects? So, investor concerns on global spillover effects. So, investors normally have short term, you look for direction, and long term, you look for value and growth. And that's investors are the same all over the world, whether they are primordial, whether they are mature, whether they are sophisticated, or whether they are speculators. So both international and local investors are concerned. And why are they concerned? Because what happened in 2008 was what we call once in a 100-year scenarios. In other words, it happened in 1918, and it happened 90 years later in 2008. That is a big crash, Wall Street crash of 1928, and then we had it. But also it was a coincidence and a confluence of a monetary crisis, a financial market crisis, and an economic crisis at the same time, whereby you had a recession, you had a crash of the markets, and you had a wipeout in both the commodities, the money markets, as well as the equity markets. So, but it happened about 10 years or so, or 20 years after the Southeast Asian crisis, where there was a meltdown in Southeast Asia, but those were confined. This was global. It happened, and it started with the subprime mortgage crisis. 2, Nigerian investors and investors in Alpha Morgan portfolio, including ourselves, have lost value when you look at 2022. Past 5-6 years, if you invested in the US stock market, we were gaining an average of almost 20% against inflation of 2%. But last year, we lost about 25 or 30%. And if in a tech-heavy NASDAQ, we lost almost 40%. However, this year, we've seen some recovery. In fact, a lot of recovery for that matter. Why? Because of the high level of uncertainty, crisis of confidence, crisis of solvency, and crisis of liquidity. There was a problem. One, post-COVID, the recovery, there was a huge carryover of fiscal incentives, aggressive budgeting, deficit financing, huge, what do you call the follow and all the people that were at home that were paid during COVID, the liquidity overhang, and as well the global quantitative easing. All of this added together, it was a recipe for spiraling inflation. As if that was not bad enough, we had the Russia-Ukraine war, which brought about global supply shocks. All of this was a recipe for crisis. So we saw inflation average in the US go from 2 to 10%, in Europe from 2 to 11, 12%, and in the UK the same thing. Even China, which had inflation below 1%, had inflation go all the way to 3-4%. I said that was not bad enough. We had political crisis, we had cyber crisis, and we have geopolitical crisis as well. So now, specifically, in this quarter, before you had this, we had what we call Binance. The Binance was more or less the king of the crypto world. So we had Bankfried Man. A lot of people did all of this, invested in this crypto world. And then little by little, they now had the Silicon Valley Bank. For those of us who don't understand, and everybody here knows, Silicon Valley is the home of tech innovation and entrepreneurship. And that's where headquarters of Google, Apple, Facebook, all of these guys are situated in Silicon Valley, a small area right opposite, right at the boundary of Stanford University, which is the home of entrepreneurship. Stanford University, as you all know, the business school has only 250, a class of 250 compared to Harvard Business School, where they have about 818 or 900 people. And the focus is on entrepreneurship. So when Silicon Valley begins to shake, the whole tech world across begins to quiver. For those who do not know, Bankfried Man, the young man who was behind this whole Binance and who now is facing trial, his mother and father are professors of law at Stanford University. So what happened? Silicon Valley had a big, long position in cash, invested heavily in bonds, and when interest rates increased, bond prices collapsed, and there was a shortfall in their capital. They tried to raise capital, and it was futile, and that led to extensively the failure of the bank. Thank God, First Citizen has acquired it, but before then, the Fed came in to support it, and the Office of the Controller of Currency supported this bank. Now, what happened? What happened was that, as against 2008, when there was an asset quality issue, in 2023, there was a liability duration issue. So they had short-term liabilities, long-term asset, there was a duration gap. Over and above that, there was a market risk, which is called convexity, which tells you how sensitive a portfolio is to any change in interest rates. A very complex calculation that tells you how, and everybody does it. Every trader does it and says how sensitive your portfolio is to any percentage move, percentage point increase or reduction in interest rates. That's what called stress testing the portfolio. So that happened. But it wasn't only Silicon Valley, it wasn't just that. Silicon Valley invested, supported and financed short-term entrepreneurs, mid-term entrepreneurs, and they got most of their money from venture capital funds, private equity funds, and hedge funds. Those essentially are what we call hot money. And the funding went across the world. And if they didn't fund you directly, they funded you indirectly. All of a sudden, we had what they call the Signature Bank, which is out of New York, I think. There's a bank that provides funding for lawyers, and then it was followed by First Republic Bank, and then tremors of Credit Suisse Bank. Well, as distinct from 2008, the global financial system was coordinated. They moved aggressively and have been able to tame it for now. So there was a solvency risk, liquidity risk, and crisis of confidence. Remember, when confidence goes out through the door, money goes out, money follows. Confidence goes, money follows. And they say money goes out through the window. So this is the table that shows you the difference between 2008 and today. Asset quality in 2008 and subprime mortgages, you know that. Banks were too big to fail and too big to save. Time lag between the tremor and coordination reaction was weeks, and it happened with Bear Stearns, followed by Merrill Lynch, followed by Citibank at that time, followed by Lehman Brothers, and then all hell broke loose. Fannie Mae and Fannie Mae Mac all shook, so the American financial system as we knew it was completely shaken to its foundation. In the end, it rolled into the political process in America, leading to the election of the first Black president at that time, by name Barack Hussein Obama. Average inflation in 2008 was about, across the world was about 6%, while in America was about 2%. Average inflation today is about 8.8%, and of course, went all the way to 10%. There was accommodative monetary policy at that time. There was monetary policy tightening now. There was no Bitcoin, no COVID, no Russia-Ukraine war. Now there's Bitcoin, COVID, Russia-Ukraine war. So it's a big difference. So investors, of course, there was fintech companies were not as many as prevalent as they were at that time now. But today the banks are better equipped. They have buffers, there's stress tests, there's capital governance, there's a lot of things that are happening in the global financial system. Things are better coordinated. The risk of contagion and moral hazard are lower. And there's information, what we call symmetric information rather than asymmetric information. So what has happened to us? We Nigerians, some of us invested, real rate of return, S&P 500. Let me see. Just a minute. So there was negative real rate of return across the board. Nigerian stock market, when you add rate of return to inflation, you find that if you invest in S&P 500, you got about, like I said earlier, you lost about 21% of your value. Nigerian stock market, you lost about 3.68. But when you add inflation to it, you actually lost about 25%. Real estate, you gained 14, but you lost about 7 and all. Bitcoin, you lost significantly because I don't know what the calculations are. At the peak, it was almost 70,000. This morning it's about 21,000. It had dropped to about 27,000. It had dropped significantly. Treasury bills in Nigeria, you got 1 year treasury bills, you got about 9.49. Discounted by inflation, you got minus 12.4. Gold, the same thing. So whichever way you invested in 2022, you lost money. You lost money by going to bed. What has happened ever since then? This year, S&P, you've gained 3.84% because global financial crisis has not had that much negative impact. The Nigerian stock market, you gain about 7%. Real estate, you've gained. And so you're in a better place today. The truth that many people got wiped out last year. So you have to survive, right, to thrive. If you don't survive, you cannot thrive when you're 6 feet under the grave, in the financial grave as well. But there's a strategy in finance which we call grave dancing. This is a different strategy altogether. Okay, those are contrarian investors who take advantage of other people's problems. Bitcoin year-to-date return is some 3%, but you would have lost almost 80% or 90% last year. So based on last year's losses, if you were there, but if you enter this year, you've gained some 3%. Nigerian Treasury bills, no big problem. So what is it that one thing I must tell you is that there are a lot of people who rushed last year and decided to exit Nigeria, converting their Naira into dollars. So I want you to imagine if you had converted at the height of the Naira weakness at 815, and today your competitors are now buying money at 740 or 745, you've actually lost significantly. So again, the law of aviations, and don't move when you're in a storm. Stay calm, because anybody who moves in a storm is likely to even bridge the storm and suffer significant losses. So today, there's low appetite to wealth risk because by Nigerian investors, and the credit risk because of the downgrade. And I want to take a few minutes to talk about the fact that I said it yesterday at a different forum, where elections are like weddings, while democracy itself is like marriage. The wedding is a ceremony, but the real test is what you make of it. There are people who divorce outside the church. Some people even divorce before they even take the oath, right? So, but meanwhile, there would have been a Shaibi and all the dance and all the spraying and all of that. That ends. The real test is what happens thereafter. So the issue is that you've had elections, you use political capital, but if there are risks of acceptability, and if there's risk of judicial miscarriage and all of that. So at this point in time, I would just say that we expect that, and we pray that things go smoothly and there's no delayed reaction, and therefore no rating agency has come out to give an opinion. No major institution globally has evaluated Nigeria's fiscal and economic risk based on the political overhang that we have. But hopefully, the Nigerian players will be mature enough to understand that if things are allowed without political comradeship and cohesion, when I say cohesion, that means reaching out to one another. It will be a very difficult situation. In those days, way back in, I can't remember when Bill Clinton was an innocuous governor of Arkansas, and he came into the political ring. He was contesting against a seasoned politician who was president and former director of the CIA by name George Bush I, who had just won a big war in Kuwait. Nobody wanted to take him on because his approval rating was 90%. Bill Clinton coined the phrase, say it's the economy is stupid, and he redefined the narrative to make it the economy. In the end, he won, and George Bush lost. But today, it's not the economy stupid, it is the politics stupid. And that's what's happening globally. That's what's happening in Iran, that's what's happening in Saudi Arabia, that's what's happening in Turkey, that's what's happening in China, that's what's happening in Russia, that's what's happening in the United States. For those of you who spent a few minutes listening to Kamala Harris, who is the vice president yesterday in Ghana, she said, and I quote, that the United States will put pressure on the creditors of Ghana to ensure that Ghana is given some room, some fiscal room to meet its obligations. Because failure to do so will only force the Ghanaians into the hands of the Chinese. That wasn't economics, that was politics. And she's going to 3 countries in Africa. Janet Yellen, the Secretary of the Treasury, who used to be the chairman of the Federal Reserve, came to Africa and she visited 3 countries as well. Also, the head of the Defense Secretary has come to Africa. By coincidence or not, none of them have visited Nigeria. I guess the travel agents couldn't, they come on the US Air Force One. So there must have been a reason why they haven't come. Maybe they're waiting for some things to happen. So I want us to have that behind our minds. But that doesn't take away from the fact that Nigeria has the highest population in Africa, has the largest economy in Africa, and has one of the most vibrant populations for enterprise in Africa. So what is the impact of the global financial firms on Nigerians? And what exposure do we have? The Central Bank of Nigeria was very clear in its mind when it asked all the banks in Nigeria to send returns as to what the exposure was to Silicon Valley Bank. But they wanted to estimate what the downside risk was. And all the banks reported 0 exposure. That is another way of looking at it. There are times when you take an exam and in the US they call it incomplete. That answer is incomplete. The truth is that Nigerian banks indirectly and Nigerian startups have exposure to Silicon Valley Bank indirectly, in the sense that you have RiseVest, you have Flutterwave, you have all of these fintechs who raise money through the private equity market. And those monies, some of it came from directly or indirectly from Silicon Valley Bank and so on, including Equinox and all the others. Those girls, Serena Williams and others, put some money into this market. So those institutions are also investing heavily in this system. So again, this is a tech-centric bank, which could trigger a decline in certain amount of money at a time when Nigeria's appetite for Nigerian risk is low, and Nigeria's demand for restructuring of its debt, new money, sanitizing its economic fiscal consolidation is at its highest point. So I want all of us to understand that. But the investors in this room on this webinar are not here only just for Nigeria. They're looking at the global picture, and that's why we have the regional opportunities under the African Continental Free Trade Agreement. We have other opportunities, and just yesterday we saw the price of copper rise, and 2 of the 10 largest producers of copper in the world are the DRC and Zambia. Okay, so what's the outlook? I think the outlook for equities are pretty strong. Bonds, if you're buying bonds now on a yield to maturity basis, interest rates are going to be tapering, even though increasing, but then after a while, you can actually do what they call short selling and buy it when it begins to retreat. The US dollar is being challenged by all sorts of arrangements. I think you have Saudi Arabia and Iran, basically the Shiite and Sunni Muslims are coming together for a joint purpose of trying to protect themselves from the fear of US domination, what happened in Arab Springs. They don't want to happen to Saudi Arabia or Iran, change of regime, and things happening in Yemen. So what are they doing? They are looking to settle oil trades in other currencies other than the dollar. If this happens, I want you to imagine that over 35 million barrels of oil are traded every day by OPEC. And if you add the Russian amount, that's about almost 38 million barrels of the 100 million barrels of oil a day. If some of those transactions are settled, all of it is now priced, one, in dollars, two, settled in dollars. If even part of it is settled in other currencies other than the dollar, it could threaten the hegemony. And that's why we call it the hegemony of the dollar. So as investors, what does this mean? The dollar is the reserve currency. In other words, the United States is the banker of every country in the world. When we want to pay one another, we have to settle over New York. If I want to buy something from Accra or even Porto Novo or Cotonou, I have to settle out of New York. At this time of the morning, New York is closed now. So I'll have to wait until New York opens if I can pay the man in Cotonou who can sell the goods to me. Would it not have been better for me just to pay him in Naira or pay him in CFA franc? No, but the global financial system is structured under what we call the Washington Consensus, the Bretton Woods institutions of the World Bank, the IMF, and other institutions around that. It's also buttressed by the Paris Club of Donors, which is under the NATO. It's not by coincidence that the North Atlantic Treaty Organization, which is a military body, also is the same body, it's a proxy for the European Union, a proxy for what is happening in Ukraine today. So, and it's not by coincidence that the world of broadband and everything is dominated by who? By Facebook and all everybody, Facebook, Google, Apple. So they have that technology. So basically you had the First World War, the Second World War, you had the Cold War, you have what they call the tech war, and of course you have the cyber war. Now you have the Ukraine war. So these are things that corporate defaults rate, as interest rates rise, we are beginning to see corporate default rates, but also bailouts are there. So we think that there are opportunities here as interest rates begin to taper, as equity prices begin to rise, and we think that a lot of countries in Africa, including Nigeria, not to say the least, are going to be looking for ways to restructure their debt. Countries do not repay their debt. What they do is to refinance it based on the fiscal consolidation stress. So we call it another way of saying fiscal sustainability ratios. So when your fiscal sustainability ratios are positive and acceptable, then you can raise additional money, and basically you become more and more indebted. And there's a book called The Debt Trap, which is another issue altogether. Now, for Nigeria, imports have declined. Money supply, foreign portfolio investors accounting for 49.3% of total capital imports. And where did the money come into? Came into banking, production, and financing. But all of this is pre-election. What we should be looking at, what is going to happen between now and transition period, which is May 29, and after May 29, going on forward. So there'll be only one MPC meeting in May, just before I think that the impediment of what they call the Naira redesign saga is easing up, but also it has changed many things. And it has also shown the vulnerability of this economy to, what do we call it, to the bottom of the pyramid. The velocity of circulation of money at the bottom, and the potency of cash. So in all of these monetary aggregates you have, before the normal, the standard thought process was that we have different variants of money, but the most potent is what we call high-powered money. High-powered money is the money that it has a massive transmission effect on prices. And usually it is money that is actually produced, if I may use that word, by government borrowing and the open market operations of the central banks of the country. So you track high-powered money as a way of trying to find out what the impact of high-powered money on inflation. But what we didn't realize is that there's also the potency and negative potency of cash at the bottom and the velocity of circulation. We saw that with this design policy. We saw that the number of tips that people give to people, when you tip people, tip the policeman, tip the security guard, tip the steward, tip this, that money oiled trade, and trade is 16% of wholesale and retail trade is 16% of total GDP. And also, we underestimated the size of the informal economy. Therefore, just because of that redesign program, and cash is only 6% of total money supply, we saw that it almost brought about some form of, to use better words, some form of economic paralysis. But we've seen it now and then. But the reality is that after this, what has happened is that we stepped up transfers, we stepped up electronic payment system. We will never go back to that velocity of circulation anymore. So people have accepted this, and then it continues to happen. So what has happened in the stock markets? You can see stock markets are a reflection of becoming more of a reflection of the economy itself, also a reflection of, not yet a reflection of political fears and anxieties. So we've seen banking up, industrials up, consumer goods up, oil and gas up, and the oil share index up. Money market rates, as money market rates went up, equities should be coming down, but effective rates of money, effective rates in the economy have not increased that sharply. So what has happened? Basically, the equity markets have actually responded by yawning. They're not totally unaffected. Now, what do we expect? Short term, tier one banks and telcos are going to make money, because in all of these things, all of you know that you couldn't make payments through many banks because everything was failing because of the pressure. And the more customers a bank had, the more difficult it was for you to get transactions through. The fewer your bank customers, the more efficient your bank system. So what has happened now is that ever since this happened, there's been a lot of migration to the banks that had fewer customers, because automatically, natural law, those systems turned out to be more efficient, not because they are better, but because they were underutilized. So again, laws of economics says when prices are low, everybody moves there and then squeezes the margins, then leads to fragmentation. So for now, while tier one banks are going to make money, tier two banks are going to make much, much, much more money than tier one banks because they are benefiting. The guys who gain, whichever you like or not, are the telcos. What are the telcos doing? The telcos, you look at Airtel and MTN, they're making money by going to bed, they're making money like bandits. But not only that, they have smart cash and Momo. So in the payment saving banks business, they're cleaning up. Then they have 5G, right? So everything is just, everything is working in their favor. So generally speaking, that's what it is. The reality is what it is. So what is the policy and political outlook for Nigeria? One, some of it will happen now, very little of it, but most of it will happen after the next administration takes over. Subsidies have to be looked at in the context of what the components of subsidy are. For those of you who follow BBC clearly, you know that there are riots in Kenya today, not because of two things. One, high inflation, but also now, and they attacked the house, the farm, and property of the outgoing president because he was supporting, is against the president-elect or the new president. And and now Odinga, who lost the election, is now claiming that the election was rigged again. Once there's potency, once the economy begins to falter, then people just go back and re-litigate the political issue. As you can see, what's happening in Israel now is how to back up. So the nexus between politics and economics is becoming even stronger than you could ever think about. So what am I saying here? I'm saying that talk is cheap. Subsidy removal can be said. I don't know his name, President Ruto of Kenya. 24 hours after he moved subsidy. Fine. That's time T. Time T plus 1 is the knock-on effect. And now, and he used his political capital because he had a strong mandate and all that. After the honeymoon comes the real work. Remember what I said? The wedding is a ceremony. The marriage is the institution. The honeymoon is over. Kenya is now facing the reality. That's where we are. So, in planning and in making your projections, to get to invest either in the downstream and all of that. I do know, I can say that for free, that the Dangote refinery is going to be commissioned before handover. And expectations are high. And it's going to be a significant event. Okay. Also, the Dangote refinery's economics works very well in a non-subsidy environment. It's the single largest investment in sub-Saharan Africa. So, if subsidies are removed, and my simple way, my crude arithmetic is that I use the price of diesel as a proxy for the price of petrol. Diesel today is going at about 710, 720. So the price of diesel has reduced from 815 to 710, 700 naira. So if the price of petrol is 700 naira per liter, what does that mean? What does that mean for transport fares? What does that mean for other things? I think that's one of the ways of looking at it. And what is the adjustment mechanism when wages have been virtually constant since 2019? So we need to look at these things holistically. What will happen when 23 trillion naira of ways and means are securitized and put into the money market, where money supply about 50 trillion. So basically you're saying 25% increase in demand for money when the supply of money is fixed at about 50 trillion, 52 trillion. So that's about 25% of the range. So the interest rates today at one, say, let us say for sake of argument, they are 10%. Automatically you are looking at 12.5% to get 25% of the range. And what does that do? Right? So if the lending rates, average lending rates, I say 25%, and you push up those interest rates to make it to get equilibrium by 25, so that's 6%. Every 1% or so increase in lending rates leads to about a 0.2 or 0.16 increase in default rates in banking and impairment. So I think that you have to know that I'm just trying to tell you the implications of it. Then over and above that, if interest rates increase and subsidy removed, then the exchange rate will adjust positively for Nigeria. So again, if you bought at 815 And today you're buying at 740. Tomorrow you could be buying at 650 or 640. So that becomes an interesting thing. Why will this happen post-inauguration? Assuming that we overcome our political problems, there'll be a supplementary budget, there'll be a visit to the IMF and the Paris Club, there'll be debt restructuring, Nigeria will be able to be rated again, and then there'll be institutional proper governance. That's where the problem is. So the political reality and the economic governance requirements are going to be in conflict. Take a lot of courage to do that. Now, I think that nominal interest rates will increase, and when those increase, we will see a drop in stock market values before. But because those companies that benefit from restructuring and all of that, like the telcos, the tier 2 banks, tier 1 banks, the banking system altogether, the fast-moving consumer goods, the manufacturers. So generally speaking, it's a guy that will lift most goods. So we've taken that into consideration. Now, let us step back a little bit and say, if we adjust, and one of the big things to be done is the electricity tariff. And I want us to sit back a little bit. We've seen, the price of diesel go all the way from 200 all the way to 800, and now it's about 700. Will the demand for diesel have got this high if we had adjusted our tariffs by 50%? If we adjusted, the public power supply was already almost 400% lower than diesel. So if you increase by 50%, you're still 350% in the money. So I would rather pay more for public power supply than buy diesel and maintain my diesel price is one thing. You maintain the generator, you buy spare parts. And every time you change from diesel, from NEPA to a generator, we are in that process at this minute in this office. We're having to put up things, put it on again. It damages everything. And if we didn't have an inverter, this thing would have gone down already. We would have had to start all over again. So I want you to imagine the disruption and the cost of all of this. Wouldn't it be better for us just to pay 50% more electricity and have it constantly all the time, like they have in Magodo and many parts where there's embedded power supply? So if you are willing to swallow that bitter pill, take away the subsidy, show cost-reflected tariffs, have market-driven interest rates, your exchange rate will appreciate. Investments will come in, and the country will recognize its full potential. Right now, they're underperforming your potential GDP. So that's what it is. The economic arguments are very, very salient and clear. But the courage to take on the vested interest does not exist. And it's easy to say, everybody say, Nigeria problem is implementation. Nigeria problem is not the plan, it's the execution. No, if you have the political will. The truth is that all these things exist. The reality is that the vested interest will not allow you. So, does anybody have the courage to take on the vested interest? I'm waiting to see that. Like they say, seeing is believing. So, I've talked about that, but one other thing though is that the timing. Removal of subsidy does not change much. All it does is take money away from your pocket and put it in the pocket of the government. And if the government, what the government does with it is what makes a difference. If the government, the money goes into a fund and the government raids the fund, which is what happened before, then we get nothing, we go nowhere. So I want you to understand this. Again, it's the politics, stupid. It is the politics. And you have political capital, the size of your mandate, the moral authority of your mandate, and your ability to get people together. What we have today is a very divisive system. So that's your total debt. The debt, the creditors have more stake in Nigeria than even Nigerians themselves. So went from 64 billion to 101 billion, 101 trillion. The total is $64 billion, and this is $101 billion, sorry. So external debt is $39.6 billion. Domestic debt is $62 billion. So what percentage of this, the ones that are Washington debt, which is the World Bank and IMF, ADB, $18 billion. Those are concessionary rates. The bilateral debt, China, France, Japan, India, and Germany, is $5 billion. And then the commercial debt is almost equal to the Washington debt. The only difference is that the debt of the Washington consensus is maximum of 2% and usually maturity of about 40 years. The problem with the commercial debt is that it's averagely today at about 10 or 11%, about 4 or 5 times the rate debt service. And because they are maturing soon, all of them will be refinanced at about 14-15%. That's what breaks the back. And those are the guys who those are the ones that will sell it and put you on your knees. So this is a structure. Is an opportunity. There's an opportunity to buy Nigerian debt. But what happened in Ghana? When people bought Ghanaian Eurobonds, Ghana never defaulted. Then all of a sudden, Ghana said, no, we're not going to pay. And people took a 40% haircut. Boy, I know a lot of Nigerian investors who went to Accra and have come back without their shirt. They came back naked. So, and Ghana was the poster boy. Ghana was everything. You know what happened? Ghana, Rawlings cleaned out the place, killed all the former heads of state. Corruption went away, everything went away, and of course, it doesn't take long before you get corrupted by your neighbors. So, what are we going to do? We're going to have a balance of payment program. We have to do a lot of work. Security, everything I've talked about already is there. So, what's going to happen to the exchange rate? Simply this. You've got to have an exchange rate determining mechanism. There's market structure, there are flows of funds, right? And then there's the synchrony, or if I may use the word, harmonization of monetary and exchange rate policy. Exchange rate policy is part of monetary policy in reality. So you can use the exchange rate actually to mop up liquidity and bring some kind of dynamic equilibrium in the money markets. So what am I saying here? We increase interest rates, the currency strengthens. If you liberalize the market structure, more money is coming. The more the supply of money, the lower the price. So basically, it's as simple as that. But if the people who are, if your security guard is the one that is actually selling your goods, right, then you're not likely to have, you're likely to be robbed all the time. So the guys who are in charge of this are the ones that are benefiting from the wider the margin. Because people bring the money in, the BDCs and all of those. So dismantle all of those things, please. So we'll end up very soon. So yeah, we're going to be seeing rates. We're going to be seeing rates converge gradually. I'm not going to offer a rate, but I won't be surprised if rates go below, definitely below 700 and started going towards 600 and lower. So these are the other things that happen: subsidy reduction, removal, debt restructuring, exchange rate adjustment, fiscal consolidation. So it is, please note that it is debt restructuring. So what will outcome? Better economic performance, sectoral performance, and sectoral without an I, and employment opportunities. In terms of sectors, petroleum will do well, and manufacturing, telecom, financial services. Are there risks? There are some risks, but you can't make omelette without breaking eggs. So any number of things can happen, but it's always good to hope for the best and pray that the worst doesn't come. So these are the sectors that I just outlined. And generally speaking, you'll have all the slides to play with. So yields, dollar value, if you naira value, if you invested $1,000 by now, this is what you would have gotten, and you can always do better. In summary, global financial tremors will take a toll on asset classes, and but ease up. I think the worst is over. You have to preserve value. Focus on the long-term financial goals. Don't be swayed. Politics will be everything. There's a big election coming up, 2024 in the United States. It has started now. Chances are that you're going to have two people in their 80s contesting, or God knows what happens next. But don't forget, the life expectancy there is, and the medical services are of a tremendous form. And the teams that work around them. It's not, the leader is only one man. There are teams of people that provide it. Don't rush where angels fear to tread. The world economy will not witness a major financial crisis like in 2008. Who am I to sit down and say when the Russia-Ukraine war will end? I do not know, which I did. Who am I to say whether there'll be another pandemic? Nobody knew. Who am I to say when things are going to get much, much better? But I think they will. Okay, so are there tools to hedge against volatility? Yes, there are. But then let us say that the world is going to be a much more efficient world. And Nigeria will adjust accordingly, resolve its internal differences, and become a major competitor in the world. Failure to do this, failure to resolve the political differences, I would say the road to Rwanda is closer than the road to Singapore. Thank you.
Thank you so much, Mr. Bismarck. Thank you so much. It's always mind-opening, to listen to you put everything together. You made reference to Pamela Harris's comment in Ghana about speaking to Ghana's creditors to give them more room. And Usifo would like to know that by your estimation, what then is the outlook for that with respect to them meeting their Eurobond obligations for coupon and principal payment as at when they fall due versus what their earlier stand was? And then related to that would be, what then should an investor do now besides Ghana, an investor in Eurobonds, in light of this falling prices occasioned by interest rate increases? Like, is it a waiting game? What to do?
Okay, let me try to address that. You see, there's when you are buying sovereign risk, you have to take many things into consideration: the size of the economy, the part where they are in the political cycle, maturity cycle. Ghana has gone through independence, coup, counter coup, cleanup of the corruption. All the old leaders killed all of them. They've gone through return to democracy. They've handed over power to opposition. Opposition has handed power back to government in power. And likely, I think Dr. Mahatma is the one that is looking good for 2024. But in Ghana, you also have the Ashanti, the Ga, and the Fente people and all of that. But Ghana has very strong institutions, right? So what I think happened, those who were in a hurry, if you held your bonds without doing anything, when it's all restructured, you will not lose any money. But those who actually panicked have sold their bonds in a hurry and have lost some money. So the first lesson is that panic doesn't help you, right? And Warren Buffett says, you cannot invest money for, anybody wants to invest for one day should know that you can invest for 100 years. It's not like a short-term investment. It is the counterparty that matters. So what is going to happen to Ghana? Ghana depends on, I think, 4 or 5 sources of income. They produce gold, but the gold has all been mortgaged off in the Ashanti gold deal. They produce bauxite, I think. They produce a little bit of oil. The second world largest producer of cocoa. They have tourism, and they also are now exporting what I call education. So they are beneficiaries of education tourism. In other words, all these other countries that have messed up the education system, they're sending their children to Ghana. Ghana education used to be of highest quality, but now you cannot vouch for. After they're gone, I think maybe University of Cape Coast, maybe they have a lot of things there. But their medical tourism is of high quality. They have two airports, one in Kumasi and one in Accra. And quite frankly, they are a major hub. Accra International Airport is, I think, the largest in West Africa. So they've done some things, but the debt profile really has helped them. So I would say that, so we think if every country goes through a cycle, these are cyclical. So there's no country is bad, no country is good. It's how you manage the downturn, because you will go down and come back up and reinvent yourself. So Ivory Coast has had a civil war. Ivory Coast reporting stellar growth. Rwanda had a total genocide and enjoyed one of the highest growth rates. So post-conflict countries in Africa are very profitable, but some countries go into conflict, never recover and go into perpetual conflict. A point of example is Democratic Republic of Congo. Some have become perpetual autocracies, like in Uganda. We went for Idi Amin, then war, and then we have Museveni, who's also on a rampage. So you see what's happening in Kenya. Kenya Supreme Court had the courage to do the right thing, but even then now, they're looking at things. So we never really know when it comes to Africa as to how to delink political risk from market risk. So that's the way I see it.
Okay, thank you very much. Now, touching on the Kenya Supreme Court, should there be a counter judgment against the elections at the Supreme Court of Nigeria that could potentially affect the status quo as we see it now? What do you think could be the potential economic outfall in Nigeria?
This is when I say heads you lose, tails you lose. So let us play it. If you say the election was not fair and you cancel it, the people who won will say no. If you say it was fair and the people who lost. So you could come up with a hybrid. Say, okay, in certain areas, so you can rerun it in those places and then can revalidate, and then could lead to a runoff. But whichever way you do it, never happens. The victors and the vanquished and everything have to come around and put the nation first. Easy for me to say that because I'm not a politician, but I do know the consequences of political misunderstandings leading to political violence and leading to entrenched crisis, which becomes irretrievable. So we've seen that happen in Ireland until they resolved the problems politically, constitutionally. We saw that happen in Slovenia and the Czech Republic. We saw the failure to do that in Yugoslavia, which led to Serbia, Croatia, and all the others, and the genocide in former Yugoslavia. We've seen that happen, and failure to do it compared to what is happening in Lebanon. There you have Hezbollah, the Party of God, and Phalanges and others. So there are a lot of examples to show that here the economy has a lot of potential and the politics is not right, then there'll be no potential. All you have is potential for crisis. So it calls for one, full-headedness, two, maturity, and ideological unity, not tribal or ethnic unity. And it calls for leadership that is respected respected and mature. It's not about primitive accumulation of wealth. It's not that. It's about leading people with a sense of purpose. Or, and when I say leading, not an individual, the leadership team. Because what you are seeing today, people running around, if this one wins, we are going to be there so we can share. You know, if this one wins, yeah. You see, basically, what you have in the Nigerian political class, and what can best described in a book called Barbarians at the Gate. Everybody's just running there. And in the end, there'll be no gate and there'll be no barbarians and there'll be nothing. Unfortunately.
Unfortunately, thank you for that. Okay, there are a number of questions here, like from Michael and Abimbola, asking about stocks. And I guess this is from your presentation where you highlighted the drop in real returns, you know, in equities. Here that say which stock should one invest in NGX now? Another one from Bimbola says, in your opinion, is it still advisable to invest in shares? So maybe you want to touch on what shares are defensible and, you know, in light of what is going on.
Okay, first of all, you know, you have cyclical stocks and defensive stocks. But in the end, what I try to do, our advice, and that's, I think I can speak for Alpha Morgan clearly, that you look at sectors before you look at companies. Any company in a sector, any sector that is outperforming the GDP growth rate should be a sector that should be of interest. One. Two, any sector, any company that is outperforming the sector also becomes a company that is interesting to look at. And any sector that has more than 40% market share in that industry is what we call a dominant player. So he has financial clout and muscle. The only problem is that, and it's not a problem really, it's that almost all of these companies are what we call, they are regime related, positively regime related. So you cannot say that because of the change of government or change of personalities, and they'll be out. Everybody, you know, after the swearing in and everybody will go and bribe their way into the good books of whoever is there and all that. The party starts again. But unfortunately, a lot of these sectors, a lot of these guys are beneficiaries of imperfect markets and barriers to entry. Those barriers to entry are the things that are actually impeding the success of the country. So you have to have the courage to dismantle these barriers. And the normal law or rule of the thumb is that the king kills the kingmaker. If not, he will not rule. So we must go out and get rid of the kingmakers very quickly. If not, you have nowhere to go. Well, I'm not recommending that, but that's the only way that you will survive. So all these sectors do well, all these companies will do well. But then let's try and remember and see which of them are dependent to any limited extent on barriers to entry and government patronage. If you see that, like in telecom, there's no patronage, nothing. There's no way of substituting the $3-4 billion of investment in in telco infrastructure. So you're done. You're either MTN, Airtel, Glo, or nothing. And what will happen to MTN? The ones that happen, Vodafone will come and buy them. And if you're having it at 250 or 270 naira a share, you'll probably sell out at about 500 or 600. You make at least 100 or 200% return. So you can't lose money in those stocks. So I think that whichever you look at it, tomorrow is likely to be better than yesterday.
All right, thank you. So I'm going to take a few questions on the exchange rates, and this is from Tola. I'll just link them up together. It says, kindly shed more light on the exchange rate convergence and how it should lead to an appreciation of the Naira in the parallel market. The other one on the exchange rate was, okay, in terms of political stability, there are people who believe that once there's political stability, there will be an appreciation in our exchange rates versus, the US dollar. Can you clarify that?
Okay, the whole idea of the exchange rate is the price of one currency in terms as it relates to another currency. The interest rate is the price of money. So if we're giving up my money, get it. So what is a price? A price is the intersection between supply and demand. But one thing is there in the pricing mechanism, there's what we call the budget constraint. In other words, you have limited amount of money to buy goods. Nobody goes to the market and says, just buy. When the money is finished in your wallet, you go home. That's what it is. There's a fixed amount of naira available to buy foreign exchange. So two things are happening. There are two markets. There's market A, which is the official market, which is cheaper. And there's market B, which is the unofficial market. So the first thing to do, you go to the cheaper market if it's available and buy there. If in that market, things become more expensive, you will take from your wallet and buy. What is left in your wallet to go to the other market is less. And if everybody goes to that second market with less naira, what happens? The demand falls. And if the demand falls, what follows? Price falls. The price falls, that means the naira has appreciated in that market. That is a simple logic. It's not rocket science. It's as simple as that. But what happens at times in the pricing mechanism is what we call fear. The fear that when you need it, you will not get it. Therefore, what you do, you're going to borrow to buy because I don't want to need it. It's like if you are a diabetic and you need insulin, and they say this is the last one, you will go and buy, you will borrow to buy, and the price of it is low, even though supply. So the fear of the unknown makes them buy and continue, and then the fear of the unknown continue to make people, and it becomes a spiral, never ending. So, and in pricing mechanism, we take aberrational events out of the equation. We look at normal times. So in normal times, and these are normal times, or should be normal times, if the naira depreciates in the official market, it must appreciate in the parallel market. And after that, it becomes a self-fulfilling prophecy. So if you went and bought Ashwebi to sell, when it was 800 naira to $1, then it becomes 600 naira to $1. The woman who goes and buy the new Ashwebi will have more and you will not be able to sell. Then you will have to sell the Ashwebi you bought at 800 at 600 to be able to go back to buy another one. That's what happens.
All right, thank you. I have a question from Sadiq Bello. He says, what do you believe will be the impact of the recent implementation of the Naira redesign policy on the banking confidence of the people at the bottom of the pyramid, having been denied access to funds in their accounts for this long?
Okay, very nice and interesting question. One, goes back to, every time you have an economic issue, go back to the basic place. If anybody tries to complicate it with all sorts of high-flying equations, that person either does not understand what he's talking about, or is determined to confuse you so he can cheat you of your money. So the first thing is that, what is money? And what are the characteristics of money? So money is A, what the government says money, legal tender. But more importantly, money is what money can buy. If the government says today, oh, the legal tender is now black, and people refuse to accept it, it has no value. So what the medium of exchange character of money is different from legal tender. Shouldn't be, it should be the same. But when there's a difference, people go for medium of exchange. Right? So the effect of this has been explained earlier on, is that people have now seen the difference between money as a legal tender, money as a medium of exchange, and more importantly, money as a store of value. So those are fun. We are practicing it and seeing it in the people in the ATMs, people in the market, it goes back to the basic definitional issues of money. What is money? And what is anybody accepting it? And if nobody's accepting it, then why would I hold it? When what does the bank do as a financial intermediary? Pay your money in and take it out. When there's a crisis of confidence, when the bank becomes a trap, nobody puts money into a trap, right? And if all the money, the question will go with that, oh, there's too much money outside the banking system. Therefore, let them come and change it. And then we'll mobilize money at the bank. What has happened now? More money has gone outside the banking system than before. But people do not believe that money, that the banking system is what it's supposed to be. So as every day you say things that people do not believe, you know, it's like a checking account. Credibility is like a checking account. Every day you draw from it, the balance reduces. So if I go on television every day and say, oh, and people say, oh, you said so yesterday, you said so, therefore I'm not going. Then there goes your credibility. So as a country, as authorities, we saw our credibility eroded little by little until where it has got to a point where nobody believes. So we have to come back and say, you know, it is right. So the reality is that I think in another 2 weeks max, money will be legal tender, will be medium of exchange. Medium of exchange will be, I don't know whether it's been store value. Let me just say that. Because store value means we are going to inflation. So let's say legal tender will be medium of exchange, and medium of exchange will be legal tender. But there's a problem. Between now and December, there's new money, old money. So there's a bi-monetary system. Again, confusion. Right? And therefore, quite frankly, I do not know. But all I do know is that the fact that there's supply of notes, the fact that people will now start going back to the banking system and putting a little bit, but once bitten, twice shy. In wherever I come from, they say if you are bitten by a snake, when you see a thread, you will jump. So people are not going to carry all the money put in the bank. I have my colleague here who is afraid of banks, who is afraid of injection.
Thank you, Bismarck. I think we have quite time for just one more question from Shino Shofola, SAN, and he's not sure you really answered the question of whether to wait on Europe, on the Euro bonds. You know, if you've bought Euro bonds and you've held on, you've you know, with what is going on, where you see bond values have dropped as a result of interest rate hikes. Should people play the waiting game? Should they just cut their losses? What is your advice?
You see, once you bought a bond, if you hold to maturity, you will get your face value and you get your coupon.
What if it's a perpetual bond?
No, if you bought a Euro bond, and the worst that will happen is that you wait till, if you bought a 2030 bond, you wait till 2030. But between now and 2030, you'll be getting your coupon every 6 months, right? There's a risk of default. If the person who issued that bond defaults, what happens? You need to go and sell it in the market to somebody who is willing to wait, right? And that person will buy it at a discount. So usually, if you're in for a penny, you're in for a pound. Usually when there's crisis, if you sell the bond, you're taking a haircut. If possible, if you're not careful, you'll take a head cut. Not only your hair will go, your head will go. So what people advise is that you are in already, do nothing, hold on the bond. Countries don't go bust. Countries refinance their debt sooner or later, right? So Eurobonds but Eurobonds are not just issued by countries, mind you. First Bank is issuing Eurobonds. Eurobonds are dollar instruments issued outside the United States. That's why they're called Eurobonds. So there's Access Bank Eurobond, there's UBA Eurobond. But you see, you can't be older than your father. So the thing is that if Nigeria's rating is downgraded, then Nigerian entities that have issued Eurobonds will automatically be downgraded, irrespective of what happens. That's why in the Eurobond market, we say that you cannot be older than your father, except there's somebody else who was your father. So the reality is that the Nigerian Eurobond issuers right? If you bought Eurobonds, I know there are a lot of people in this webinar bought Nigerian Eurobonds. I do not think that if I bought the Eurobond of Nigerian LNG or I bought the Eurobond of a leading Nigerian bank, that they are likely to default. So don't panic. Moody's will downgrade us, but essentially, maybe the outlook will get better. And if everything is going to collapse, then when day becomes night, everybody's house is affected. So I don't think so. I won't panic.
Yeah. Thank you so much. I'm sorry, our participants, we can't take any more questions. We're way past our closing time. And so we would have to stop with the questions now. Thank you so much, Bismarck. And I'll welcome our Managing Director for the Investment Banking Subsidiary, George Imadi, to give us the closing remarks.
Thank you, Doi. I want to thank everyone that has found time to be part of this webinar of today. You all agree with me that each webinar in Alpha Morgan has always been an improvement on the past, and today is no exception. We've gotten sufficient knowledge. We are well educated by reason of listening to this, our erudite speaker. I want to first begin by appreciating God for making it possible today. It's been a consistent event program for us. It's not by making, it's God Almighty that has done it, and I brought everybody together to be able to share in the knowledge we have today. But I want to single out our participants, our audience, who have been very, not just attending, but very active and participating. Very engaging. You need to see the torrents of questions that have been coming in, and you need to know the numbers that have attended this webinar, and that is an attestation to the acceptability of the program and to what you are doing to make it worthwhile for us. We don't take it for granted in Alpha Morgan. We deeply appreciate you, and we say God bless you. Keep coming each time we have this webinar, and you'll be better for it at the end of the day. I want to speak of our speaker, that your great knowledge, your erudition, your global economic knowledge has been of immense benefit to all the participants in this webinar. You have become a phenomenon of a sort. The way you aggregate the events locally and globally, and to put everybody together to provide the needed knowledge, the pathway to go for the future, has been of immense benefits. And we deeply appreciate you for that. And we'll continue to say God bless you for availing your time, your resources, your energy, and the passion with which you deliver all of this. As concerning as the situation is, each time we get out of this webinar, we get some suiting effect and the pathway to chart to be able to navigate the future. That is what you have represented for us. And we deeply appreciate you. Thank you so much, Mr. Bismarck Rewani. Lastly, but very, very much not the least, is our group managing director, our host, who has consistently and passionately, for that matter, made this program to happen. Time will fail me to speak about his nature, but I will just say of this that he's a man with a golden heart, with a gold heart, and he's a man that has availed us his resources, his time, everything, and he passionately ensured that this program must hold, not just hold, it must hold successfully. Mr. Adebrahimon, we want to say thank you. We want to appreciate you for your commitment and for your passion to ensure that you give to humanity, and from where you also feel you are benefited from, and everybody is happy with you. And please permit me to say that he's hiding something from all of us. He recently celebrated a very, very landmark birthday, 60th birthday. And I will crave the indulgence of everybody that has participated in this webinar to wish our group managing director, Mr. Adebrahimon, a very, very happy birthday with a sounding head, with good, with prosperity, with peace of the mind, and everything that the Almighty God will bestow on him. And I want to say congratulations to you, sir, and wish you the very best of the future as God continue to strengthen you to provide and make this program a continuous one. Thank you, everyone. On this note, Ladies and gentlemen, we want to draw the curtain, and we fervently look forward to the next edition that will come in the next quarter, the last week of the next quarter, and by the grace of God, and I know it's going to be a better one than we have ever experienced. Thank you for coming, and God bless you. Bye.
Thank you, everybody.
Thank you, everyone. Bye-bye.
At Alpha Morgan Capital, we know that wealth creation is not just for you alone, but for the next generation as well.
That's my boy.
Congratulations, dear.
We at Alpha Morgan understand that every effort you make daily is a journey to create sustainable wealth. That's why Alpha Morgan stays committed to helping you sustain generational growth in wealth so you can focus on other things. Alpha Morgan, funds management, investment banking, financial advisory. Alpha Morgan, your investment banking institution. Go to www.alphamorgan.com. Call 081 51 71 7171. Alpha Morgan, growing